Hey everybody, Glenn Tompkins here from VectorVest, and I've got a little surprise for you. We've talked about a lot of different stocks here on YouTube, but today I wanted to hone in on something I've been wanting to do for a little bit, looking at two different styles of investing, growth stocks and value stocks. So this is going to be a 2-video series, so there's going to be one following this video, and today we're going to talk about what growth stocks are. And I'm going to give you about 4 stocks that you can consider for your growth portfolio. Now, if that's something you're interested in, you sit right there. We're going to get back to the basics, all right? We're going to talk about stocks that you're looking at more long-term in your portfolio, and we're going to hone in on growth stocks versus value stocks. Now, those are two different styles of investing, and do they need to go against each other? No. Can you do the both of them? Yes. But in these videos, these 2 videos, I'm going to show you the difference between the two. And today, we're going to start off with growth investing. So let me go to my website here. Growth versus value investing, understanding the differences, because there are differences. One is you're looking for undervalued stocks that have good upside potential, and one is you're looking for growth stocks that are working now, potentially working now, that should outperform the market. So let's scroll down, and I'm going to start off with growth investing. Growth investors often chase the market's high flyers. You see that done a lot. You've likely seen a disclaimer from financial companies that past performance isn't indicative of future results. We've heard that time and time again. Well, in this investing style, it's seemingly at odds with that idea. So you're buying the high flyers because they have good growth potential, but do they? And I'm going to show you how to do some analysis to see if they truly have growth potential. It's essentially doubling down. Investors bet a stock that has already demonstrated better than average growth, be it earnings, revenue, or some other metric, will continue to do so, making it attractive for investment. Now, wait a minute. Growth. Growth as compared to what? In essence, it's growth as compared to the stock market. And we've got an indicator called relative value that looks at a stock's long-term price potential as compared to an alternative investment in a AAA corporate bond. When you buy a bond, it's a relatively safe investment, right? You buy the bond, it matures, you get all of your money back with a small interest rate. And a lot of people will do that for the safer part of their portfolios. But our indicator, relative value, shows you the stock's potential to outperform that safe investment. So we're going to take a look at that. So I wanted to just give you an understanding of what growth stocks are. These companies typically are leaders in their respective industries. Their stocks have to be above average price to earnings ratio and may pay low or no dividends. So yes, these are stocks. It's all about the Janet Jackson, what have you done for me lately type of scenario of what's going on. Is it growing now? But by buying at an already high price, the risk is that something unforeseen could cause the stock's price to fall. So another thing, in a growth stock, maybe you're looking at good buying opportunities after a stock is pulled back. If a stock has got great potential to grow, why buy when it's rising? Not saying that it's a bad thing, especially if it continues to rise. But if it does pull back, could that offer you another opportunity to just wait for the right time to buy it? Absolutely. So I've got 4 stocks for you to consider. One of them is Digital Turbine with the ticker symbol APPS. And here's a news article that came out. Digital Turbine in a $600 million deal for mobile ad monetization platform Fiber. So I like that it's got some potential to grow based on some news behind it. Another stock, hot and heavy in the COVID space, Moderna. mRNA vaccines reduce infection by 90% among healthcare workers. As a company that's a biomed that is already in the whole market of administering vaccines, stuff like this helps to make the stock grow even more, right? I have another one called It's a lower dollar stock, company name Electrovaya. Why did I like this as a growth stock? Well, Electrovaya is focused on contributing to the prevention of climate change through supplying the safest and longest lasting what? Lithium-ion batteries in the marketplace. Where else have you seen that? EVs. This could be a low dollar stock that's got a lot of growth potential. And my fourth stock that I'm going to look at is Light in the Box. I have just recently heard about it. Light in the Box is an online outlet to help you to go buy everything and anything. And a lot of people are in that mood of still buying online. So I said, what makes this so special? I went and found out. Where is it? Here. What is Light in the Box? It's ticker symbol LITB. What is Light in the Box, you may ask? If you haven't heard of it, you probably will soon. That opens up the door to a good potential growth stock. This online discount site, referred to as both Light in the Box and Light in the Box Limited, offers deep discounts on everything from clothing to electronics. This is a lower dollar stock, and with this kind of backing or information about it, it could be a great growth potential. All right, so let's go take a look at these stocks. Here's my watch list of these stocks, starting with apps. There's Moderna, there's EFLVF, and LITB. Let's analyze these stocks. As a growth stock, these stocks don't have to be undervalued, but they need to have good upside potential. So as I look at apps, Digital Turbine trading at 74 with a value of 46, currently trading above its value. It's overvalued. And just because a stock is overvalued doesn't make it a bad stock. Moderna trading at 118 with a value of 336. And that is very different in the whole space of biomedical. Most of those stocks are not undervalued because they put a lot of money into research and development. Moderna, on the other hand, is nicely undervalued. Now, here's my two lower dollar stocks. Electrovaya, trading at 137 with a value of $1.25. That's pretty close in value. I'm going to call that fairly valued. And Light in the Box, that online website is currently undervalued, trading at 260 with a value of 624. Now let's talk about some of the VectorVest indicators. These indicators are cast on a scale between 0 and 2, where above 1 is favorable. This is going to be the most important indicator when looking at these kinds of stocks. Relative value. Relative value is a stock's long-term price appreciation potential, and again, is compared to a AAA corporate bond. Remember, after that bond matures, you get your money back with a small interest rate. With a relative value on that scaling between 0 and 2, at 1.81 on apps or Digital Turbine is at 1.81. This tells me that this stock has the ability to outperform that AAA corporate bond by 81% over the next 1 to 3 years. That's growth. Moderna has got a relative value at 1.92, should outperform that AAA corporate bond by 92% over the next 1 to 3 years. The Electrovaya, 57%, should outperform by 57% over the next 1 to 3 years. And the Light in the Box that a lot of people may not know about, should outperform that AAA corporate bond by 59% over the next 1 to 3 years. Now, I look at apps. It's got the second highest relative value with a relative safety at 1.34. That indicator, relative safety, is an indicator of risk. How risky is the stock? Below 1, you're going to take on more risk on the stock. Above 1, the stock is not nearly as risky. Relative safety looks at the consistency and predictability of a company's financial performance. Stocks that go up or grow are stocks that continually, for the most part, meet or exceed earnings expectations. All right. Moderna, it's got a relative safety at 1.03, not quite as high as Digital Turbine, but still telling me that it's not as risky a stock. Now look at my lower dollar stocks, Electrovaya and Light in the Box. These have good upside potentials, but you will assume some risk because the relative safeties are below the value of 1. You go into this understanding that you will adjust your stops accordingly to keep you in these stocks longer. These stocks definitely have good upside potential. Now, along with that, 3 out of the 4 sell recommendations. So, Glenn, why am I buying these? These are good long-term plays that now you need to time the right time to get into the stock. Notice that 3 out of the 4 stocks have a relative timing below 1. Relative timing looks at the stock's short-term price trend. Is the stock in an uptrend right now or not? These RTs below 1 tells me that these stocks are not moving up right now. So let's do this. Let's go take a look at the stocks graph. Folks, before we go take a look at the stocks graph, let me invite you to our YouTube page as a whole. Look at all of the videos that we have out there, a lot of videos on industries, on individual stocks, on what's hot in the market. This is a great place for you to venture out and take a look at these videos to help you make better decisions in the stocks that you're looking to get into or not, or nonetheless to make you and give you the ability to become a better investor in the market. Don't forget to subscribe to the page, hit the like button, and don't forget to hit the bell icon to be alerted to new information that comes out on our website. All right, now we're looking at the graphs of these stocks, and I'm going to look at them a little differently. I'm going to put on a 1-year graph. All right, and I'm going to put on different indicators than I normally do. I'm now looking at a 50-day exponential moving average, good long-term trend. I'm also looking at that indicator, relative value. Is it rising? Earnings per share. Is the stock making money and growing up in price, going up in earnings? Earnings growth rate. Not only are they making money, but are they growing their earnings? And here's another indicator that we don't always talk about, CI. It is the comfort index. It's the stock's ability to avoid big pullbacks in the stock's price. All right. So I can see apps, bottom left, top right, a little choppy right now, a little bit in a channel. Currently, with today's activity, right back at that 50-day moving average. I like that for longevity of trend. Look at that relative value, the stock's ability to outperform that AAA corporate bond over the next 1 to 3 years. Love the earnings per share, love the earnings growth. And you notice that as the stock's price goes up, notice how quickly it will rebound from a pullback. All right, that's what that CI tells me. The opportunity for the stock to avoid lengthy pullbacks. See how steep that is, but look at the stock's price rebound. Let's go to the next one. Here's Moderna, currently below the 50-day moving average. It is moving from the bottom left to the top right, but this stock has got a little bit more volatility based on board with it. I do have a level of support sitting at 120.85, which today it closed below. I've got one more line in the sand sitting at 102.76. Always remember, even though the stock has got good growth potential, there may be a bad time to get into a stock like this. Relative timing right now, that short-term price trend is below 1. The stock right now is not in an uptrend, but I like the other indicators. How about EFLVF, Electrovia? Remember the lithium ion batteries? Currently below the big trend of 50-day moving average. I do have a line of support, a line in the sand at $1.23. If it falls below that, then you might want to move on to another stock, but I like the potential nonetheless. Here's the relative value. The stock should outperform that AAA corporate bond. There's the rising earnings growth, and the stock's ability to withstand long and lengthy price declines. Even though the stock pulls back, look how quickly it does come back, except for right now, there is a level of support, though, sitting at $1.23. Next stock is LITB, same kind of scenario. Bottom left, top right, a lot of run here. It pulled back, dropped below the 50-day exponential moving average, went above, gapped down, currently below. I've got a line in the sand sitting at 201. Remember it said that a lot of these stocks are stocks that are already running that people are chasing after? Well, if I already have determined that these stocks have good upside potential, these could be setting up as great buying opportunities. Don't lose sight of that. Now, you may ask yourself, how did you come up with these stocks? Well, for my people who are VectorVest subscribers to the channel, I went to Unisearch and I created a search. I created a really simple search. Growth stocks, stock price greater than $1, average volume greater than 250,000 shares. There's that relative value. Relative value had to be above 1. It had to be outpacing that AAA corporate bond. and the stock's earnings growth rate had to be greater than 10%. Now, I'm looking for stocks that have the ability to grow. Now, keep in mind, the market's direction is going to affect the ability of these stocks to make money. I'm going to run the search. I'm going to show you the top stock that comes up, and this is sorted by relative value times CI, a great combination to find stocks that are outpacing that AAA corporate bond that go up more than they go down. This is why Digital Turbine was in my list. If you want to know or learn more about some of these growth stocks to find on your own, 99 cents trial to the VectorVest software gives you this capability that I'm showing you here right now. I'm only giving you one of the stocks because 99 cents is not a bad price to pay to get out of a list of 8,600 stocks, over 8,600 stocks, to find these kinds of stocks. Now, let's say that you have a stock and you want to see if it is a growth stock with that relative value above 1. Watch this. I'm going to click add and I'm going to type in a website, www.vectorvest.com/free. That's how you get to a free stock analysis. I'm going to put that up there. And now let's say you have a stock like, a good growth stock. Let's say Apple. You have Apple. Let's go to put in APPL. Apple. There we go. And you say to yourself, Glenn showed me what a growth stock looks like. Let's get an analysis. So it's going to send it to my email. Let's go let that come up. There we go. That's what I was looking for. Relative value. How about relative value on Apple is at 1.31. Apple should outperform that AAA corporate bond by 31%. So Apple is a growth play. How about the stock's value and price pretty close to each other? Let's go see what the earnings growth rate was. Growth, there it is, earnings growth rate has a forecasted earnings growth rate of 17%. I like that. So this is a good way to see if your stocks are considered to be growth stocks you can send in for your own stock analysis to make that determination. Folks, this is part 1 of a 2-part series. My next video will be on value stocks. But again, don't forget you can use both of them, growth stocks and value stocks, to shore up your portfolio. For the time being, folks, this video is over. And until the next time, see ya.